Hi guys, welcome back to my channel Market Scalper. In today's video, we are going to look at investment. So let's look at how to invest from today. So let's look at what is investment. So investment is earnings, return or profit from the money you have put in a fund. So for example, if we have invested in a stock, so if we have invested like for example 1,000 rupees in ITC, so over the year, like if we have invested in 2021, that is, so if we have invested 1,000 rupees in ITC, and for example if we have bought 10 stocks, so we'll look after looking at the fundamentals and the technicals, you would say that the market would go up, so the stock would go up for ITC, the price would go up. So you're predicting that in 2022 that the price may go up. So for when if you have invested 1,000 rupees and you have bought 10 shares, for example, at 200 rupees, and in 2022 the same quantity of ITC which you have bought 10 quantities, maybe like around 250 if you see. So if you will see that it's like a 50 rupee gain, so it is an investment. So for 10 stocks you have got 50 rupees. So now let's look at the next slide and see how is it different for savings. So yes, of course, there is a lot of risk which will be involved in this type of investment, because it will be subject to like market risk. So if the market moves up in your favor, it would be like you're in profit. But if it market moves down, it will be lower. But nonetheless, unless the company completely shuts down, the prices will be fluctuating in a particular range. So what is investment? Like we looked at is earnings, returns or profit on the money which you have put in a particular fund. So savings is the amount which you have, which like a collective amount which you have invested, and you want to keep it like safe. For example, you put it in a bank, so you put it in an FD, you put it in a recurring deposit. So in that particular thing, your money is not at risk. So therefore, profits are there, but not much. So for example, if you invest like 10,000 rupees in stocks, and you put 10,000 rupees in your RD, that is your recurring deposit. So in stocks, if you're investing 10,000 rupees and you are having two portfolios, so you may get a return of 1,000 and 1,000. Yeah. So in the end of like even 1 month, you may be able to see that your profit has become from 10,000 and it has become 12,000. So that's a 2K profit in a span of 1 month. But in an RD, if your minimum you'll have to invest is 6 months. So you'll have to keep putting this particular amount. So in the end of amount, you may get 60K in 6 months. And the return, of course, the percentage of interest is depends on various banks, but you would hardly get around 300 or 400 rupees. So plus 300, so that's 60,300 rupees which you are getting in the end of 6 months, but you're getting 2K, if you're investing rightly in the right particular stocks, and I mean, you're having it. So this is an investment. So investment, you're looking for a long-term potential profit or a money, which will help your basic capital to grow. So savings is basically like the word says, savings. So you're playing it safe. That's what it means. So like investment is better than savings. So if you invest in the right place, it would be better. So now let's look at what are objectives of investment. So objectives are like to keep money safe. That is there. So to keep money safe, as in you would say like you have invested like 10K in, for example, uh, let's take Asian Paints. So you do know that Asian Paint, for example, during festival season, especially in Diwali, or the prices will go up because most of the people, look at painting their houses. So the stock will go up. So invest. So even if you're investing it in November, in around Diwali time, so it is that your money, your capital of 10K is definitely safe, and plus on top of that, you may earn profit of 2K, 3K, depends on your investment. So it helps money grow. Yeah. So this month, if it is 100 rupees, then next month it would be 200. Then it would be like next month it would be 280. So it helps the money basically to grow. So steady income, to earn a steady income. Yes, apart from your basic rent and food and water and clothing. So basically, it's like if you invest every month 10K in the stock market in the right spot, you will be getting decent amount of returns. So to minimize the burden of tax, well, yes, definitely, people do invest to say that they have some amount of savings. So they do invest in the stock market and save up for retirement. Yes, definitely. We would require to save up for retirement. And over the years, like around like 5 years, 10 years, if you have a good portfolio, then it would give you decent amount of returns during your retirement. And plus, it will help you meet your financial goals as well. So, if your financial goal is like for having child education, so child education, then marriage, then you want to go for a high school, master's university abroad. So all this will help you go make your money grow if you invest. So coming to the types of investments, so there are various types. So stocks, bonds, mutual funds, and PPF, which is the personal provident fund. So I'll be going through each one of this in my next video. So this is just an overview of what investment and their types are. So how would you invest? So you would analyze your financial needs, like say for example for what you need it for, and how much are you ready to invest. So if I am going to invest like for example 1 lakh, and this is for education, So I would say that 1 lakh I'm going to diversify, which is the next one, investment diversification. And I would, for example, put 20K here, 20K here, 20K here, and 20K here, and 20K here. So I would invest each of this 20K in various different stocks. Okay, so like this would be like ITC, Tata Motors, then you have M&M, and then you have Asian Paints and Cipla, for example. So looking at diversification also means that diversification in terms of industry. So you have your hotel, hospitality, this would be your automobile, this is paint, and this is your pharma. So also looking at time period. So how fast do you want to invest in the returns? So basically, if it's investment, you would do a cash and carry, which is would carry forward for at least a few years to see a decent amount of returns based on subject to market volatility, that is, and also do a periodical reassessment. So for example, if in 6 months you're feeling that this is not giving you proper returns or it's not moving as much as you would want it to, but you're still in a profit, like for example of 2K, you would take this and you would exit and take the profit of this, and which is 22K, and then you would buy another stock, analyzing various other things, doing its fundamental and technical analysis. So this is what it is. So how would you invest is first analyze your financial needs, investment diversification, which is very much needed. So you need to diversify your portfolio. Then time period and periodical reassessment. That's it for today. So thank you guys for watching my video. Do subscribe, like, and comment my video. And in my next video, I'll be talking to you about the types of investments. So do look out for my video. Thank you.